Founded in 2014, Nikola Motors burst onto the scene with a bold vision to revolutionize the heavy-duty trucking industry through innovative zero-emission hydrogen and electric-powered vehicles. At its peak, Nikola's ambitious goals attracted high-profile partnerships, investor enthusiasm, and a market valuation that placed it on par with some of the automotive industry's giants. With products like the Nikola One, a hydrogen fuel cell-powered semi-truck, the company quickly positioned itself as a leader in the fight against climate change, promising to deliver sustainable, emission-free transportation solutions. However, in September of 2020, this vision unraveled after a bombshell report by the Hindenburg research alleged that Nikola and its founder, Trevor Milton, had misrepresented the company's technological capabilities. The subsequent scandal led to Milton's resignation, investigations by regulatory bodies, and a rapid decline in the company's stock price. Although Nikola faced significant legal, financial, and reputational damage, it has since sought to rebuild through a transformation of its leadership, through strategy and approach. In this video, we're going to explore the rise, the scandal, transformation, and the current status of Nikola Motor Company, with a particular focus on the stock performance and investor perception following the scandal. From its inception, Nikola Motor captivated investors and environmental enthusiasts with its ambitious plans for zero-emission vehicles. The company initially focused on hydrogen fuel cell technology, which could theoretically offer greater range and quicker refueling times compared to battery electric vehicles. The Nikola One, unveiled in 2016, was presented as a revolutionary hydrogen-powered semi-truck that could cover long distances on a single refueling. Later models, such as the Nikola 2 and Nikola Tre, were announced as a part of Nikola's plans to build a comprehensive lineup of clean energy trucks. Beyond vehicle production, Nikola aimed to build an extensive hydrogen refueling network, which it claimed would facilitate a seamless transition to hydrogen-powered trucking across the United States. Nikola promised to establish 700 hydrogen stations, which would fuel its fleet of trucks and transform the heavy-duty transport sector. This ambitious vision led to major partnerships, the most notable of which was General Motors. In September of 2020, GM announced a $2 billion deal to partner with Nikola on producing the Nikola Badger, a hydrogen electric pickup truck, and to supply technology for other Nikola products. The announcement of this partnership, along with Nikola's public debut through a special purpose acquisition company, or SPAC, catapulted the company's stock price to new heights. By mid-2020, Nikola's market capitalization had reached nearly $34 billion, briefly surpassing that of the established car makers such as Ford. Investors saw Nikola as a high-potential player, poised to be a key force in the clean energy revolution alongside industry leader Tesla. However, in September of 2020, Hindenburg Research published a detailed report accusing Nikola of being an intricate fraud. The report highlighted multiple instances where Nikola allegedly misled the public and investors about its technological capabilities and business operations. One of the most notable revelations concerned a 2018 promotional video showing the Nikola One truck moving down a road. Hindenburg alleged that the truck had no working powertrain at the time and was merely rolling down a hill, not driving underneath its own power. This became the symbol of Nikola's exaggerated claims, casting doubt of the company's technology. Other allegations in the Hindenburg report pointed to questionable claims around Nikola's hydrogen production capabilities, their battery technology, and other proprietary innovations. It became apparent that much of the infrastructure Nikola promised, including the hydrogen stations, did not exist in any substantial form. Hindenburg's report not only damaged Nikola's credibility, but also prompted regulatory scrutiny, with both the Securities Exchange Commission and the Department of Justice launching investigations into Nikola's business practices. Trevor Milton, Nikola's founder and the charismatic public face of the company, was soon forced to resign as an executive chairman. In 2021, Milton was charged with securities fraud and wire fraud, with prosecutors alleging that he had deceived investors about Nikola's technological progress and product readiness. The fallout from the scandal sent Nikola's stock price plummeting from its June 2020 peak of over $65 per share to under $20 by the end of 2020. For investors who had been drawn to Nikola based on its grand promises, the scandal represented a substantial loss of confidence and value. In response to the scandal, Nikola took several steps to stabilize and rebuild. One of the first actions was a reorganization of its leadership team, beginning with Milton's departure. Mark Russell, who has served as president and CEO, assumed a greater leadership role, focusing on guiding the company through its crisis. Additionally, Nikola's board appointed new members with experience in regulatory compliance and corporate governance, aiming to prevent similar incidents in the future. Financially, the impact of the scandal was significant. In December of 2021, Nikola settled with the SEC for $125 million to resolve fraud charges, though the company did not admit to any wrongdoing as part of the settlement. Beyond the immediate financial cost, Nikola's stock price remained volatile, and the company had to recalibrate its expectations and business plans. The GM partnership was restructured, with GM ultimately withdrawing from any equity stake in Nikola and scrapping plans for the Badger pickup truck. Instead, GM agreed only to supply fuel cell systems for Nikola's hydrogen trucks, making notable scaling down of the initial partnership. In an effort to recover its reputation and rebuild trust, Nikola has implemented a range of strategic changes aimed at stabilizing its operations and rebuilding investor confidence. With Trevor Milton's exit, Nikola's leadership sought to emphasize commitment to transparency and compliance. The appointment of Mark Russell as CEO and the addition of additional board members experiencing corporate governance reflected Nikola's focus on accountability. The company has pledged to avoid making exaggerated claims and committed to providing regular data-backed updates on its technological process. After the scandal, Nikola narrowed down its focus just to the Nikola Tre, a battery electric truck designed for short-haul routes. The Nikola Tre is positioned as a more achievable and realistic goal, allowing Nikola to demonstrate product reliability and operational capabilities. Unlike the Nikola One, the Tre has undergone extensive testing and is now being delivered to clients in limited production, allowing Nikola to build a reputation based on concrete, demonstrable achievements. Now, despite the scaling down of its hydrogen ambitions, Nikola has continued to pursue fuel cell technology with a more measured approach. The company has partnered with energy providers to establish a limited hydrogen refueling network that can support early adopters of its hydrogen vehicles. This strategy acknowledges the high costs and complexities of building a national hydrogen infrastructure, but keeps Nikola positioned as a potential leader in hydrogen technology for long-haul trucking. Given the reduced investor confidence and stock value, Nikola has had to implement cost-saving measures, including reducing its workforce and scaling back non-essential projects. The company's financial adjustments reflect a shift towards a more sustainable and conservative approach to growth, focusing on revenue-generating projects while avoiding speculative initiatives that previously characterized Nikola's vision. After the scandal, Nikola adopted a more cautious approach to investor relations, emphasizing transparency and realistic projections. The company has committed to regular updates on product testing and deliverables, offering a level of detail intended to rebuild trust. This approach marks a stark contrast to the company's earlier promotional stages, focusing on clear and achievable goals rather than just hype alone. Now, Nikola's stock price has remained a point of contention and concern in the aftermath of the scandal. Following its initial public offering via SPAC in 2020, Nikola's stock reached heights of over $65 per share, fueled by investor excitement and optimism about the company's potential to disrupt the trucking industry. However, the scandal caused the stock to lose nearly 80% of its value, a significant setback for early investors. The decline in the stock price reflects both market skepticism about Nikola's prospects and a broader caution among investors regarding SPAC-driven valuations and high-growth tech stocks. Nikola's experience became a cautionary tale for investors, leading to increased scrutiny of similar companies. Despite efforts to rebuild its reputation, Nikola's stock has remained volatile, fluctuating with each development in the company's legal issues, product announcements, and quarterly financial reports. Analysts have had mixed views on Nikola's stock potential. Some believe that Nikola's shift to a more focused and realistic business model could help stabilize the stock and lead to gradual growth. Others, however, remain skeptical, noting that the company faces considerable competition from established players in the electric and hydrogen vehicle market, as well as the substantial capital requirements for building hydrogen infrastructure. Additionally, the market has become increasingly crowded with electric truck startups, many of which are vying for a similar customer base. Now, Nikola's stock performance also reflects broader challenges within the clean energy sector. While government incentives and regulatory pressure on emissions to create a favorable environment for zero-emission vehicle companies, Nikola's ability to capitalize on these opportunities depends solely on its ability to deliver reliable products. Investors are closely watching Nikola's production and delivery numbers, as well as updates on its hydrogen infrastructure development, and a need to assess the company's growth prospects. As of today, Nikola Motor has made significant strides in stabilizing its business and maintaining a presence in the zero-emission trucking industry. The Nikola Tre, its primary product, has entered the market and is gradually building a reputation within the short-haul trucking sector. Although Nikola is still a small player compared to its competitors like Tesla and traditional trucking companies, its achievements with the Tre have helped the company gain traction. Looking ahead, Nikola faces both challenges and opportunities. The company's gradual approach to hydrogen infrastructure aligns with a growing interest in hydrogen technology. Yet it must secure substantial capital and partnerships to fully develop its hydrogen network. Additionally, while the regulatory landscape is increasingly favorable for zero-emission vehicles, Nikola's ability to leverage this environment depends on its financial stability and product reliability. In terms of stock performance, though, Nikola's future remains uncertain. The company's ongoing legal battles and potential settlements could continue to impact investor confidence. However, if Nikola can demonstrate consistent product quality and revenue growth, it may eventually attract a more stable investor base. Volatility of the stock price underscores the market's cautious optimism towards the company, with investors awaiting clear signs of recovery before making significant commitment. All of that just to say, the Nikola Motors scandal was a defining moment for the electric and hydrogen vehicle industry, highlighting the risks associated with speculative investments and unverified claims. Nikola's response to the scandal demonstrates a commitment to rebuilding and establishing a sustainable presence in the industry. Now, whether Nikola can fully recover and capitalize on its own vision for hydrogen-powered trucking remains to be seen. However, the company's evolution reflects a shift in the startup landscape towards accountability and substantiated growth, a trend that is likely to shape the future of clean transportation investments. What do you guys think about Nikola and the scandal that has happened over the past couple of years? Let me know down in the comments below. And if you like more videos like this, please leave a like and consider subscribing, and I'll see you guys in the next one.